All right, good evening, everybody. It is Monday, December 5th, 2022. It is 8:46 p.m. and officially start to the week. Apologize, we could not have the Markets Look Ahead live stream yesterday. We were undergoing some technical difficulties, but we are back today. Now, we're going to talk about a couple things tonight on the live stream. First of which being the Institute for Supply Management. They did release the services PMIs today. Now that did come in at 56.5%. That was a 2.1% increase over October's reading of 54.4%. And obviously at the beginning of every month, usually the first business day of the month, that is when we hear from the Institute for Supply Management on their manufacturing PMIs. About 2 days later or the next business day, we do hear from the services sector, right? So the two main sectors in the US economy is the manufacturing sector and the service sector. So we're going to do a deep dive into that tonight. I also want to talk about China for a little bit. China has rallied about 34% from the bottom or from the lows when we had that huge capitulation event, as there were a lot of worries, rightfully so, about horrible working conditions out of the Foxconn factories. Also, people were rebelling, right? You could call them widespread protests as it relates to the zero COVID policies and the lockdowns. But ever since then, we've pretty much been off to the races. Now, the Chinese market just opened about, 10 minutes ago, maybe a little bit less. So if you look at ticker symbol HSI, which is the Hang Seng Index, now we did open lower, but we are rallying off the lows. And if you'll notice, we're bumping up right against that 200-day moving average, which will probably act as some resistance. So I think it's appropriate to watch the China market. Also today in US trading, the American ADRs or the American depository receipts played very, very well. If we look at ticker symbol BABA, which is the ADR of Alibaba, we did close up fractionally, again, getting turned away at that 200-day moving average, but that is something to watch. We are also going to be talking about the divergence between the XLE, or the Spiders Energy ETF, and light crude futures. Now, if you notice today, the XLE took a big hit. And we've been talking about this because usually you don't have this wide of a gap or this big of a divergence between crude oil. We've topped in light sweet crude or light crude oil probably back in March when we hit $130, now trading at $77. And if you notice, the XLE, or the major energy ETF, has been hitting all-time record highs and trading near 52-week highs. So it seems as if we are closing that divergence, but even though the XLE was down 3% today, it is correcting towards its 50-day. Now, one of the things I'd like to say about the XLE is that almost 50% or 50% of the index is in two stocks. All right, ExxonMobil, ticker symbol XOM, having about a 23% weighting in the ETF, and then Chevron, ticker symbol CVX, has about a 19% weighting. So almost half the entire ETF is in two stocks. So it is very important we keep an eye on those two specific stocks. Generally speaking, if they're trading lower on the day, you could bet the XLE will be falling under pressure. The Dixie, all right, is finally broken below its 200-day moving average, trying to rally back to 106. I think a weaker dollar has really been fueling this rally in equities, especially as it relates to the Dow. And then lastly, we're going to talk about some true market leaders that seem to have topped, and some historical data about previous true market leaders when they top. How long does it take for them to retake their place as true market leaders? And many of them never reach all-time record highs again. So we're going to look at new merchandise, and then we will round out the stream talking about big pharma. So let me close up the laptop here. We'll say hello to everybody in the chat, and we will get the stream started. Hopefully everybody had a fantastic start to the week on this beautiful Monday, although very cold in New York. So I would just like to give you guys a warning there. So let me put my laptop away and we'll get started. Also, congratulations to Brazil on their big commanding win over Korea. But I think the two most exciting teams, at least so far this year in the World Cup, has definitely been Japan and Korea. They definitely played their hearts out, so congratulations to them. But unfortunately, they are going home, and big congratulations to Brazil. So let's see who we have in the chat. I see the ABX girl is here. Good to see you. RJ is here. This is Olaf from Colorado. Vinny Castellano. Good to see you, Vinny. Hope you and Maria are well. I see Dr. Long is. And we'll see everybody when we get downstairs, because usually the internet goes out.
Lobby.
All right, we are ground floor, my friends. Standing outside 57th Street, 6th and a half Avenue, across the street from 157. I see Ryan Royal. What's up, Ryan? Good to see you. Austin City Limits, Western Mass, Dave. Linda Silva. Good to see you. Unij22, Michael, Joseph, Robert is here. DM21, awesome. Welcome. Lee Lavender says hello, Tom, and everybody in the chat. Happy Monday. Happy Monday to you too. We are standing out here on a very clear night in Manhattan, but very cold. We are looking at the Central Park Tower as well as 220 Central Park South. Now, speaking to 220 Central Park South, obviously CEO and founder of Citadel Securities, Ken Griffin, has an apartment there, and I wanted to make sure everybody saw the interview between Citadel Securities founder Ken Griffin and Mayor of Miami, Francis Suarez. So if you type !, Miami in the chat, I think it's going to be a big value add for all of you to take some time out and listen to that interview. Ken Griffin gives some really good insights on inflation. They talk a little bit about global macro and then give some forecasts or projections on what is going to go on in the economy headed into 2023. Now, obviously, I was able to attend that event, which was a fantastic event put on by the Economic Club of Miami. And, you know, anytime you could listen to probably, I would say, arguably one of the greatest entrepreneurs in finance of our lifetime give a interview, talk, it's definitely worth the listen. So if you want to listen to that, I did program that link in the Nightbot. Check it out. Once again, ! Miami. It'll drop you the link. FredX is here. Good to see you, FredX. I trust you are well. We're starting off the stream outside of Carnegie Hall. Carnegie Hall is looking good today. There was a lot of people in Manhattan. A ton of people in Manhattan today. Edward Adams says Christmas is in less than 3 weeks. That's ridiculous to think about, to be honest. It's crazy. Cindy Foley says 81 degrees in Dallas today, Tom. Wow. I wish we had that weather here in New York City. Tiago Pereira is here, says hello from Brazil. Congratulations on your fantastic win tonight, or earlier today. Brazil comfortably beat South Korea. I think the final score was 4-1, but very comfortable win. It was nice to see Neymar back on the field, recovering from his injury. Roman is here, welcome, pup. Just can't believe the year's almost over. I can't believe it either. Mary Lamb says, can we see the tree tonight? Yeah, I think, you know, Mary, we should be able to get down towards Rockefeller Center. I think we're going to head up right to Central Park South, walk all the way down to 5th Avenue, and then maybe head down 5th. We'll see. Dan Zhang is here, says, hey, Tom, how was your day? Have you been... No, I'm not sure. I'm not sure what that is. Interesting. But Dan, I am watching the HSI. Now, China just opened, what, 15 minutes ago, maybe? And the Hang Seng Index, even though we open lower, usually what you see during new emerging bull markets is markets will gap down and then rally throughout the entire day. And it's usually the opposite during bear markets, right? We'll usually gap higher and then sell off and fade throughout the entire day. But China has been really strong. Now, I do think we need to pay attention to that very key 200-day moving average, which we're pretty much right there now on the Hang Seng Index, right? But we've had a crazy rally. We've rallied almost 35% from the lows, and we are bumping right up against that 200-day right now. Now, we've been talking about this on the stream for quite some time. And did anybody see the tweet that Michael Burry put out? I think it may have been Evan Weeks was asking a question about Michael Burry famously appeared in the movie The Big Short. Now, he came out with a series of tweets. And one of his tweets was that he is not short. I think he just said, I'm not short, but I am bullish on Hong Kong and Chinese stocks. Wondering if any of you guys seen that. We are outside the Brooklyn Diner. Hey, Al Jabra, thank you so much for your donation. I appreciate it. You are very kind, and I appreciate your support. William Brooklyn is here. This is checking in from Brooklyn, New York. Hello, everybody. Hope you're all doing well. Thank you, sir. I wish the same for you. We got a nice little Christmas tree outside of 888 West 57th Street. Dusty Cole is here. Good to see you, Dusty. It's always a pleasure. And right here is Central Park Tower, 217. Let's walk this way. 217 West 57th Street. The dark horse is I'm a bear on China. Yeah, I mean, the dark horse, there definitely wouldn't be a contrarian view, right? I mean, many people are extremely bearish on China. Now, over the last couple weeks, I would really say over the last couple months, we've had a lot of very well-known PMs, portfolio managers, analysts being paraded out on CNBC and the like, saying that China is quote-unquote uninvestable at times, right? But usually, during those specific times when fear is rampant through the market, sometimes that's where you find the most alpha, right? Now, I'm not telling everybody to go out and buy Chinese stocks, but oftentimes we'll talk about something that's called a pain trade. And where would we say the pain is in the Chinese market, to the upside or the downside? I don't know. I'll let you guys decide that. Western Mass Gate, Dave, good to see you. Bree Grams is here, welcome. Yes, Me Media says, Tom, did you see the Japan World Cup game? I did. Very good game. Now, Japan had a ton of opportunities to score. I think they played fantastic. And I saw the Korea game too. Now, I think I would say the most two entertaining teams this World Cup, to me at least, was definitely number one, Japan, and number two had to be Korea. I think they weren't the most talented teams, but 100% the most entertaining. Fantastic. Hey, Fabio is here. Says, hey, Tom, do you know the tax deed and tax liens real estate acquisitions market? Well practiced by big banks. I don't really, not really my wheelhouse there, Fabio, to be quite honest with you. Junior says, Tom, happy holidays. Always happy to see you. Hello from California. Good to see you as well. Yeah, Adam says Japan and Korea played very well. They played well and they also played hard. You know, I think I made this comparison last time in the live stream. Really quick, this is Broadway. If you look all the way up Broadway, you will see the Trump International Hotel and Tower. You know, you could have some of the greatest players on earth, such as Cristiano Ronaldo, obviously plays for Portugal. But he seemed to look lazy at times, right? And you may not have the best players on the Japanese national team or the Korean national team, but they play hard, man. All the way up into the very last second, too. And I really appreciate that. It's always very fun to watch. Mike C says, I tend to root for the team with the best fans, says Mike. Good to see you, Mike. Thanks for joining. We'll cross here, and then we'll go up to Columbus Circle, and then we'll walk all the way down Central Park South until we hit 5th Avenue. Susanna H says, hello, Tom, and everybody, welcome. Mac Lover says, Tom, will Apple eventually move all manufacturing out of China? I think the supply chain is still too close to China to move away 100%. What are your thoughts? Yeah, I mean, that's something we've been talking about too on the live stream. Now, it's interesting. I think there was a big headline over the weekend that Tim Cook has announced he is moving more manufacturing away from China. And I think this is just the mere start of a massive emerging trend. And you're already seeing this specifically as it relates to these big semiconductor companies. Now, I will say, just because we're starting to domesticate the supply chain and bring back manufacturing capacity to the United States, it doesn't mean it's like flipping a light switch, right? It's going to take some time. I mean, if you think about those big chip fabricators, the fab plants that they're building here in the United States, I think it's going to take at least until 2026, if not the early part of 2027, for those really to get, I would say, up to full capacity. So I think it's an emerging trend. I think it's a necessary trend. And unfortunately, the COVID pandemic really exposed that, right? Because as everybody would agree on the stream, well, maybe not everybody, but I think the vast majority of us, you can't really run a business and forecast business activity with a zero COVID policy. And you're already starting to see this, not just in the United States, but a lot of the rest of the world. And now I think the last straw is a lot of these protests and borderline riots that are breaking out in China, right? So much so that the Chinese government has actually walked back some of these crazy restrictions, right? So look, I think it's a move in the right direction. I think, as Dan Zhang was pointing out, Dan was providing us a little bit of context that, look, these riots are a big deal. You know, it's not like protesting here in the United States. You know, there could be really serious ramifications of protesting and rioting in China. So I think the people have had it, and you're seeing major corporations move manufacturing activity outside of China to places like India and even back to the United States. And I think it's just the start of a trend. But I don't know. What are your guys' thoughts on that? Do you guys think that this is going to be a continuing trend? Or do you think that a lot of multinationals are just so addicted to, you know, I mean, let's call it what it is. It's very cheap labor, cheap manufacturing capacity over in China. So we'll see. Hey, Junior is here. So Tom, any thoughts on if the Fed will start to pull back or minimize the interest rate hikes? Yeah, so the next FOMC meeting, to Junior's point, is December 13th, and it concludes December 14th. Now, if you look at the futures market, this is Columbus Circle, by the way, so Trump International Hotel and Tower. Here you have the Deutsche Bank towers. I believe we're going to get a 50 basis point rate hike. And if you look at the futures market, there's about an 80% probability that the Fed hikes about 50 basis points. But here's what I will say. Friday, does anybody recall the major piece of economic data we got out Friday? We got the non-farm payrolls. And payrolls came in extremely hot, really hot, beating Wall Street economists' expectations. But not only the payrolls we need to be paying attention to, it's really the unemployment rate, right? We talked about Federal Reserve President John Williams as he spoke at the Economic Club of New York a week ago today. He said that in his view, in order for the Federal Reserve to make a material pivot, he wants to see the unemployment rate at 5%. Well, in the non-farm payroll report, the unemployment rate held steady at 3.7. So I don't know. I think that as we have a lot of this quote unquote positive economic data come out, the Fed is not stupid, right? The Fed is looking at all the data, all the leading economic indicators that we look at. And it seems as if wage inflation is very sticky. And also what we got out today, we heard from the Institute for Supply Management, the services PMIs came in quite good. So I don't see the Fed backing off anytime soon. They may slow the pace of rate hikes to 50 basis points, but at the end of the day, I think rates are going higher. Thoughts there? What do you guys think? I want to know your opinion more so than my own. I want to see what the consensus is out there. Touring different places. Good evening. Happy Monday to you. We are here at Central Park South. This is my absolute favorite part of the city. If you look all the way in the distance, you can see all the way to the east side, the Upper East Side. Lila is here. Says goods are going to cost more here when we stop using foreign goods, but it's good for us in the long run. Not sure how foreign relationships will be after this, though, says Lila. Interesting point. SME Media says, I've heard the prediction is that the rates will rise. Yeah, I mean, rates are definitely going higher. Definitely going higher in my view. It just depends on how fast they'll get there. Well, this horse is hauling, man. I've never seen... Usually these things are going at like a snail's pace. That guy seems to be in a hurry for something. Hey, Boris is here. Says, good night, everybody from Jamaica. Good to see all of our viewers from Jamaica. I'm sure your weather is a lot better than it is here. It's a cold night in New York. At least it's not windy. Dr. Longus is Tom. I am wondering if they still do another 75 basis points in a couple months. You know, I think the deciding factor for that is going to be when we get the next GDP print, which I think is January. Is that correct? Anybody know when we get the next GDP print out? I believe that is January. So next month? Oh my God, I said next month. Crazy. Next month is 2023. That's nuts. All right, 220 Central Park South we are walking past right now. One of the newest additions to Billionaires Row. Fantastic. Hey, photos from around New York, says Tom. CNBC mentioned possible 50 basis points. Yeah, that's consensus right now, and that's what the futures markets are pricing in. I think you'll probably be right. Brad's Brain says, I really thought service sector numbers would tighten. They didn't. Fascinating thing is nobody can't hire anybody. Nobody is applying, but we need higher unemployment. Not like folks are trying. Yeah, so to Brad's point, and again, I forgot to program this into the Nightbot, but just as we went over, and this is the New York Athletic Club, by the way. I'll try to give you guys a nice shot of it. But remember back to our live stream on December 1st, when we covered in depth the Institute for Supply Management PMI numbers for the manufacturing sector. We got the services PMIs out today, right? But the most important thing, I think, go to the report, Google it, and scroll down about 3/4 of a way down on the page, and you'll get a sense of what respondents are saying, right? So the survey literally surveys people. Hold on one second. Let me wait for the light to cross here. This is a wonky intersection. And I never know which way I don't know if those guys are turning, and I don't know if these guys are turning. But anyway, yeah, read what the respondents are saying. And there was quite a few responses talking about how the labor market is still tight, that it is difficult to hire people, and that is adding to wage inflation, wage pressures. Also a couple comments on the supply chain, which we'll talk about. Julia M, good to see you. Keisha M is here. Welcome, Keisha M. 10 says, hello, I am from Brazil. Well, congratulations on your win. Great game. I think Neymar scored, what, 1 goal on that penalty kick? Techno Pink, the one and only from the Dominican Republic, is here. Good to see you, Techno Pink, as we pass the JW Marriott Essex House. SME Media says, Tom, I heard that Slack CEO will be stepping down next month. So maybe you're referring to Salesforce CEO, right? So Salesforce had, obviously the CEO is Mark Benioff, but they also had a co-CEO, which he will be stepping down. You are correct. I believe the exact date is January 23rd. I think that is when he is going to be stepping down. And the sole CEO is going to be Mark Benioff. But look, if there's anybody that can lead the company, I think it's going to be Mark Benioff. So we'll see. Anyway, so guys, the services PMI today came in at 56.5. That was a 2.1% increase over October's reading of about 54.4%. Now, if we go back throughout the individual categories in the report. The business activity index registered 64.7%, huge increase, okay? About 9 points higher over October's reading of 55.7. So massive, massive jump there. But here's the interesting part. I actually put a lot more credence and a lot more weighting on the new orders index. And the new orders index actually declined. So I think as we build out our framework here, right, our macroeconomic framework, as you interpret these reports, both the ISM PMIs for the manufacturing sector and the service sector, I would encourage you to put a little bit more weighting on the new orders index. And that came in at 56%, about a half a percentage point lower than in October, right? And I always tend to put a little bit more weighting. This is 106 Central Park South, by the way. Really, really nice building. I always tend to put a little bit more weighting on new orders, just because it's a little bit of a better gauge on what's going to happen in the future, and I think it's a better gauge on what's going to drive economic activity, which then should drive GDP growth. But look at this art gallery here, very unique. Yeah, Mac Lover is right. Says no more cheap money. You are correct. The dark horses next year will be a bloodbath. Anthony versus Ligma Johnson. Wasn't that the guy? Wasn't that the Twitter guy, right? The Twitter hoax. Will M says these CPI numbers are pretty scary. How much of the rise would you say is due to Ukraine conflict versus the arising issues from the Big C? Now, I'll say this. At the end of the day, what impacts inflation is the money supply, right? Now, very seldom is that really talked about. But in my view, if you really want to kill off inflation, you got to shrink the money supply. And that's going to cause a lot of pain. A lot of pain. Now, if you think back to our streams about maybe 2 or 3 weeks ago, we talked about the main drivers for the stock market and for the economy. I'll quickly show you guys the entrance. This is the main entrance to Central Park right here on 6th Avenue. Very, very famous entrance here. This is where all the horse and buggies come from, all that. Across the street, you have the very famous 5-star hotel, the Ritz-Carlton. And then if you look all the way down 6th Avenue, you could actually see the One World Trade Center. It's looking pretty nice. Now, when we talk about the S&P, right, I always say that there's two main drivers, right? If you think about the S&P 500 PE, or price earnings ratio. Now, what drives price is liquidity. And what drives earnings is GDP growth. So if you think about the environment we're in, I think it was Mac Lover's comment I think it was him. He made a really good comment. He said no more cheap money, right? And when money is cheap, it encourages participants or market participants to take on more of it, right? To take on more cheap debt. And that usually means the monetary policy environment is very loose. So the Federal Reserve will leave interest rates artificially suppressed. And they do this by either cutting the Fed funds rate, which is conventional monetary policy, or they expand the size of their balance sheet. So we talk about the Federal Reserve buying the short end of the curve to suppress rates. They buy agency mortgage-backed securities as well as U.S. Treasuries. So if you look at the M2 money supply and you look at liquidity overall, when liquidity, hold on, I'll give you, this is a really nice hotel here. It was totally remodeled during the pandemic. It is called the Park Lane Hotel. On the second floor here is sort of like their ballroom, their dining area. Really, really nice. I would highly recommend a stay here. Beautiful hotel. Now, if you look at liquidity drivers, that usually could be a forward-looking indicator for volatility. So if you look at the VIX environment, pretty much since the 2008 financial crisis, I would say after, volatility has been relatively low because liquidity is high. There's a lot of liquidity flowing through the system mainly due to the Federal Reserve, right? But in times of economic stress, when we go into quantitative tightening and the Federal Reserve is not expanding their balance sheet, they're actually shrinking the balance sheet, you'll actually notice a move in the VIX, and you'll notice the VIX is relatively elevated. And this is why pretty much all year, right, 2022, we've been seeing the VIX historically elevated, right, hanging right around in the 30s. And it just so happens right now, we are actually trading, I think, below 20 for the first time in almost a year. So it's a really good point. It's a really, really good point that we first need to understand the environment we're operating in. And to Mac Lover's point, the era of cheap money is gone. And when money is cheap, it encourages all market participants, speculators, corporations, to take on more of it. And what that will allow them to do is grow their operations, to spend more, and that thus translates into GDP growth, which translates into higher corporate earnings, which also translates into higher equity valuations. And the inverse is true in this environment when we are in a period of quantitative tightening. Liquidity is coming out. Hey, Pup is here. Susan H is here as well. Good to see you, Susan H. So we are now right outside of the Plaza Hotel. This is one of my favorite views in the city right here, overlooking 432 Park Avenue. Hey, SME Media, this is Tom. I read that Stuart Butterfield, CEO of Slack, resigned today. A few days after Brett Taylor, Salesforce co-CEO, resigned. So I think you're right, SME Media. I saw something on LinkedIn that there's a new CEO of Slack. I forget her name though. I think it's a female CEO now. Anybody know? SBK Pilot 11, good to see you. It says, has the Fed indicated that they will no longer buy mortgage-backed securities or dump them? Well, I don't really think there's a need to, right? Because if you look at the housing market, I would consider it in a recession. Now, that may seem to some viewers or some people controversial, but from the data that we're seeing, I mean, look at all of the reports that we get on a monthly basis from the National Association of Realtors as it relates to existing home sales. We've seen constant deceleration. I think this is the 11th straight month, or the 9th straight month, of declining or decelerating sales in the existing home market. The same thing for new home sales. So the average 30-year fixed rate mortgage, I believe right now is what? 6.5%. It's had to have come down a little bit. For over the last 3 months, it was 7%, but obviously we've been getting a little bit of a bid in the bond market, and that 10-year US Treasury is now under 4%. So I really don't think they need to, because housing is slowing materially. This is the Apple store here. Looks all decorated and very, very nice. Usually this fountain and everything here is lit up. Maybe it's turned off for the night, who knows? Derek is here. Welcome, Derek. Thank you so much for being here. Sparks Carnival, says Tom, 6.5% sounds right for a 30-year fixed rate mortgage. Yeah, I mean, I could have sworn it had to have come down, right? Because in all fairness, that 10-year US Treasury yield which is the driver of mortgage rates, has come down too. You're now looking at the Plaza Hotel, one of my favorite landmarks in New York City. Unfortunately, we do have all the scaffolding up there, but anyway. Cindy Foley, good to see you. Dave. Welcome, Dave. Rich Child 9 says, glad you're back in business, Tom. Thank you so much, Rich Child 9. Yeah, we had a little bit of technical difficulty last night. I'm not really too sure what was going on. Now, the stream worked. I just couldn't see anybody's comments. So I didn't want to just walk around and not, have you guys think I'm ignoring you or something like that. So I just said, we'll just call it a night. Austin City Limits, welcome. Mr. Marquez says maybe they could put lights outside the Apple store. Well, they have a couple things going on here. Not too much. We'll check it out. Bagels and Walks says, hola, Tom and gang. Good to see you. Zozo Bob, welcome. Good to see you. Now, I want to bring everybody's attention to the Dixie, or the dollar index. Right now, the Dixie is an indice that tracks the relative strength of the dollar against a basket of foreign currencies. And the reason why I want to bring that up is because we are outside the Apple store. And on Apple's Q3 earnings, one of the most important things that stood out to me is that Tim Cook came on the call and said, even though we had a very, very strong quarter as it relates to revenue growth, they grew their revenues about 8% year over year, they would have had a double-digit revenue growth quarter if it wasn't for the very, very strong US dollar, right? But the dollar has come down materially here. So maybe we could use that as a little bit of a proxy for next quarter, because Q3 earnings for Apple ended in September. And September, the Dixie was trading well over 115. And now we are trading at around 106. I believe we're now below, and solidly below, the 200-day moving average. So if the dollar can't rally, I think that I would take that as a very, very bullish signal. But if we have the dollar rallying here, if we have the 10-year US Treasury yield rallying here, I think we could have a pretty harsh sell-off in the equity markets. Mike C, good to see you. Welcome, Mike. Gary Carpenter is here. Thank you for joining. Wow, Edward Adams says, I'm doing great with my mortgage, 4% fixed 16 years ago. Very, very good deal. Now I'll show you guys something cool. You see all of these sort of like seating area? They're actually portals into the Apple store. So you can actually see people doing shopping and things like that in here. Now I have a question for everybody, because that comment we just got was very interesting. Now, one of the reasons why we're not seeing a huge sell-off or huge price declines in homes specifically. Now, home prices are coming down, but the reason why we're not seeing really aggressive price declines right now is because we're just not seeing inventory come onto the market. So there was a really good article in Barron's this week as we passed the Dior store here, that says the vast majority of people, if you really think about it, over the past 6 to 7 years, purchased homes with an average interest rate below 5%, right? So the theory there is, if you have a 30-year fixed rate mortgage and you are locked in at 3%, you really have no incentive to sell your home, because the average 30-year fixed rate mortgage right now is roughly 6.5%. It has come down somewhat, right? But if you were going to sell your house, even if you made some money on it, which you probably did, right? you would just have to go right back into the same market where supply is very, very constrained. And if you wanted to buy, let's say, a little bit nicer house, a little bit bigger, it's going to cost you more, and your monthly payment will probably be double. So a lot of would-be buyers or a lot of homeowners are just staying put. Anybody in the chat feel the same way, or maybe you're going through something similar, or know somebody who's going through something similar, to say, look, we wanted to sell the house, maybe get something a little bit bigger, something a little bit smaller, but the interest rate environment is deterring you. Thoughts on that? Or do you think that's a little bit too overblown, and that's more of an excuse to justify the situation? Hey, Business Mail is here, says I agree with that. Pup says, I got told I should have bought a home earlier if I wanted cheaper in my early 20s. That's the advice that I've been given, says Pup. Yeah, Calm, you're right, says that's the hotel from Home Alone. We are looking at it right here, the Plaza Hotel. Sparks Carnival, you're correct. AutoZone releases earnings Tuesday. You were right on that. Thomas L. Hey, Thomas, says, what are your thoughts on the sudden drop in oil prices throughout the U.S.? Well, I think it's pretty good, right? I mean, I definitely don't want consumers to be suffering. And that is why I'm actually watching very closely the divergence we've been seeing between the XLE and crude oil. Hey, Travelnista says we want to sell houses in Cali, just not worth it in Cali. High interest rate environment is horrible. Dr. Longus says that does sound like a good explanation. I also have friends in that situation. Willie, what's up? Says we sold the big house and bought a smaller one with cash. That's actually probably a very good financial move there. Susanna H says, Tom, not long ago you mentioned the real estate market will favor foreign capitals. Vivian is here, says totally agree. Lex S, good to see you. I do not have any keto ice cream recommendations. Hey, Matthew M says, so true, Tom. I locked in a 4.6% 30-year fix in April. I'm just making sure I'm not missing anybody. Yeah, so we'll see. Ever Draws says, hey, curious about how you even got into stocks / passionate about finances. Do you remember the first investment you ever made? I don't know. I've always just really liked business and finance and things like that. The first investment I've ever made, I'm trying to think. Well, I'll tell you the first investment that I lost a lot of money in. I think I've told this story before. Now, this was right when President Trump, former President Trump, he just got elected, right? So here was my thesis. This is when I was very, very young. I was still in college, very naive, like many college kids are. So my thesis there was that President Trump was going to deregulate the oil industry in the United States, and that offshore drilling companies would really, really take off and provide very, very healthy returns. So I'm not even sure if these companies are still around, to be honest. I think they may, but they probably emerged from like Chapter 11 bankruptcy, and bankruptcies like 3 times over. One company was called Transocean. I'm not sure if anybody's heard of that. Back in the day, the ticker symbol used to be RIG, R-I-G. So anyway, I went long a basket of offshore drilling companies because I thought, okay, the deregulation play, they're going to drill like crazy, margins are going to increase. But I didn't do any of the work, right? I was a kid at the time still. I didn't do any of the work. I didn't understand the debt levels. I didn't understand just how much financial strain these companies had. And I pretty much took them all to zero. Right? No risk management. But my first real investment, that was probably my first bad, horrible trade. But my first real investment, I think, was in Starbucks, ticker symbol SBUX. And I actually wrote a Really compelling bull thesis on Starbucks, probably back in 2014. And it was all about China growth. This was at the time when Howard Schultz was really aggressively pursuing expansion in China for Starbucks. And I said it was going to be a home run. They were going to knock it out of the park. And China growth is really picking up for Starbucks, but obviously as of late with the zero COVID policy, we sort of covered that ad nauseum. But I think those were my main two, right? I think it's appropriate to give you one that I did really well on and one that, I took a bath on. I think those companies are out of business, right? Transocean. I don't know. Anyway, Sparks Carnival, so Starbucks took a downgrade today, but only because they couldn't see them continuing their fast growth, says Sparks Carnival. Mike C says, I lost money on oil drillers back in the day. Noble Drilling, I think I own that one. What was that? What was the ticker for Noble Drilling? NE? Wow, these names are coming back to me. This was in the early teens. All of these companies were horrible companies. Horrible companies. Dan says, do you trust the documentation that Chinese companies provide? I don't. And that's been a real problem, right? And that's why it's so finicky to invest in the Chinese names, right? I always give this example, okay, of Luckin Coffee. Now, Luckin Coffee is an actual functioning business. There was actually an executive from Ziff Brothers Investments. Ziff Brothers is actually over here on Park Avenue. It's a family office. But an executive from Ziff Brothers is now like a 3% equity, has a 3% equity stake in Luckin Coffee. It was delisted because of accounting fraud. Now, the company is not fraudulent, right? But the Chinese companies don't have to hold themselves to a notable accounting standard as, U.S. listed companies do, right? Or U.S. companies do. And that's why the SEC has been in constant battle with a lot of Chinese companies. Henceforth, let's say if you log on to your brokerage account, you want to buy a share of Alibaba, right? Ticker symbol BABA. You're technically not buying the stock. You're buying an ADR, which is an American depository receipt, which you're buying shares in an offshore holding company, which then invests into the company. So it's tough. It's really hard to trust that. Luckin Coffee had 300% revenue growth. Turns out they were cooking their books to the tune of $300 million. They were delisted, but I think they still trade OTC. I think they still trade over the counter. But it's a good point. Dan, it's a very good point, actually. Willie says Transocean is a penny stock now. I'm surprised it's even around. Yeah, Brenton Long says, remember Luckin Coffee? Yeah. I think you could still buy it, but I think it just trades OTC. I think it trades over the counter. So here we are, 57th Street, Madison Avenue. If you look all the way down, you could see the beautiful One Vanderbilt building, all lit up in blue. Lex S, some of these New York YouTubers are trying to convince me the crime is really not out of control. Who should I believe? I can't tell you who you should believe or not. I think you kind of got to just do the work yourself. Sparks Carnival says Campbell's Soup reports Wednesday. They'll easily beat earnings despite margin compression. Sparks Carnival, talking about margin compression, I wanted to draw everybody's attention to some of the big mega cap names that were formerly true market leaders, right? And when I mean true market leaders, like these were the surefire stocks. Usually in every single bull cycle, you have specific companies and stocks that are pretty much surefire bets, right? Always hitting 52-week highs, always hitting all-time record highs. But, if you look back throughout history, once those true market leaders top for the credit cycle or for the business cycle, very, very seldom do they then go on to be the true market leaders of the next bull cycle. So if you look at Tesla, I think Tesla was down like 6% today. Now, if you talk to any equity research analyst that was bullish on Tesla, what was their major claim to fame for Tesla, right? And maybe rightfully so, right? And I think rightfully so. That was the margin premium of Tesla over, let's say, GM or Ford, right? If you look at the margins, hold on one second. If you look at the margins or gross margins at a Ford or a GM, it's probably maybe mid-single digits to low single digits. Tesla has had consistently 30% gross margins, and over the last two quarterly earnings reports, we've actually seen a little bit of margin compression, and I think that's why the stock has taken a big hit. Also, obviously, rates are going up, right? So I'm interested to see what Tesla is going to report next quarter, because if their margins keep compressing, I think the stock is going to continue to get hit. So look at ticker symbol TSLA, right? Look at Amazon. These stocks have put in major cyclical tops. They're all trading well below their 50-day and 200-day moving averages. And usually, as we emerge to a new bull market, there's going to be completely new merchandise leading the way. So I think if people are trying to bottom fish in these names, I would be very careful about that. Yeah, Mike C says even Apple prior to Steve Jobs' return, Apple was really in the tank. You know, even a company like Microsoft, right? I think when Microsoft topped in 2000 at the top of the tech and telecom bust, I'll quickly show you guys 432 Park Avenue. We haven't been over here in a while, but I think it took over 12 years for Microsoft to just break even again from all-time record highs. So this is why I say, if you're self-managing individual stocks, a portfolio of individual stocks, you gotta risk manage. Okay, you cannot afford these ridiculous drawdowns of 80%. You know, I think a good exercise would be, you know, go on tradingview.com or even Yahoo Finance and look at the true market leaders of the last bull cycle. And you'll notice a lot of them are down 80%. You know, if you're a fund manager, especially if you're managing OPM, other people's money, you cannot deal with 80% equity drawdowns. It's just not acceptable. All right, team, check this out. 432 Park Avenue. This is one of the most exclusive and most expensive apartment buildings in the city. I think this is going to be a very unique shot here, standing right across the street, to give you some perspective just how tall the building is. What do you guys think of 432? Hey, Julia M, what's up? Says, but do we think that the pandemic really threw everybody off and things will just go back to the way they were? I mean, I know they won't, but I'm just saying. Yeah, I mean, I really think it's also sort of what we talked about before, right? And I think this is where a lot of individual and, like, let's say retail sort of miss the big picture. And we always talk about, everybody says, okay, where do I start? What's the best stock to buy? I think that's really, you have it backwards, right? I think in order to understand, all right, let me say this. I think Peter Lynch said it best. Behind every stock is a company, right? And I think in order for you to understand how businesses operate, you really, really need to understand the bond market, right? Because the bond market essentially sets the price of money. And for businesses to borrow money, they borrow money at rates. And depending on how expensive or how cheap money is, there's going to be specific influence on these companies. So when people just buy random stocks, I think it's first and foremost most important to understand the global macro picture and then the monetary environment and the benchmark rate at which companies can borrow money. This is 425 Park Avenue. They actually just completed this building. Look at how unique the building looks. This is right across the street from 420 Park. This is where that big burglary was. But this is one of the newest additions to Park Avenue. This building looks fantastic. You could also see the moon in the top right-hand corner. Because I want to quickly refer everybody back to that very famous interview that Bill Ackman gave with Andrew Ross Sorkin. Now, Bill Ackman is the CEO and founder of Pershing Square, and he said, if you want to keep it very, very simple, investing and finance is all about valuating, or how to valuate the value of a company's future cash flows. Right, and this is why, let's say if you work in an investment bank or you're a hedge fund analyst, you're probably going to be building a lot of discounted cash flow models, right? And based upon where the price of money is, right? So let's say if interest rates are near zero, the present value of a company's future cash flows are going to be worth a lot more. But when rates go up, markets need to fundamentally reprice. Because as interest rates go up, this is the Ferrari showroom. I wouldn't really say dealership, but maybe showroom. Because as interest rates go up, the present value of a company's future cash flows go down, and traders and investors need to reprice. So I think the reason why you saw stocks like Shopify and all these other extreme high growers, take off during the pandemic in the last bull cycle, it's because they had extremely, extremely high revenue growth. They could afford to sacrifice profitability now to invest everything in research and development because money was so cheap, and Wall Street assigned a premium valuation to those companies. But now we are not in an environment of cheap money anymore. So if you've noticed, a lot of portfolio managers and traders have been selling those stocks and buying value. So a transition out of growth to value, which is why we're going to talk about a lot of pharmaceutical companies tonight on the stream too. How much would you say some of these cars cost here? Maybe it'll say it on the tag. I don't think it says the price. Maybe these are too expensive to show the price. William M. or Will M says 300K for one car. Jeez. That's crazy. 300K. It's like you're driving around in a house. No, I think Ferraris are more than 150, right? Alligators is there. They go for around 250K. It's insane. Yeah, Mr. Cold, I know. Crazy. Yeah, NMB 045 says value stocks, but also blue chip stocks. So NMB 045, I wrote down a couple, because here's what I've been doing. I've been scanning because as we know, if you look at the data, once a new bull market emerges, right, and this has been a very brutal bear market. I mean, even though maybe the indices from peak to trough have gone down 25%, you look at these individual names, these things have been smashed. Okay, 80% declines. This has not been a run-of-the-mill bear market. These things have been getting slammed. Okay, so what are the stocks that are leading the market right now? Well, I've always said the Dow is leading the S&P, and the S&P is leading the NASDAQ, right? And if you look at, well, first of all, the Dow is made up of, it's a basket of 30 stocks, right? It's not a market capitalization weighted indice. It weights it by price. Now, if you go, I think I gave you guys, if you type ticker symbol DJI in the chat, so exclamation point DJI, go through that list and look at those 30 stocks, and you'll notice something about those stocks. They tend to be more solid, stable companies with very, very strong free cash flow, and they are also very, very aggressive dividend payers, right? For one example, IBM, right? I think IBM has about a 4.5% dividend yield. I'll give you one more look at 432, then we'll head out. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, and we would love to have you guys along for the ride. Also, if you like the topics we talk about on the stream, feel free to scan the QR code on your screen and punch in your email, because we do write a free investing newsletter where we talk about the US equity markets, emerging markets, fixed income, all the things we talk about on the stream. You don't want to miss it, so please scan the code and punch in your email. It is completely free. But I wrote down a list of stocks. Oh, look at this. Tons of steam pouring out of there. Now, I wrote down a list of stocks that are trading near their 52-week highs and all-time highs. And as I was doing this sort of exercise, I've noticed a lot of those come from big pharmaceutical companies or big pharma. And notice the dividend yields on a lot of these pharmaceutical companies. So we'll just go down the list. And before I do this, this is not an endorsement to buy. This is not an endorsement to sell. What we do on this podcast, or the stream, whatever you want to call it, we just have broad-based conversations about the market. You gotta be self-sufficient. You gotta do your own work. Do things yourself. Be self-sufficient. Don't copy trade, and be an adult. Right? I think that's fair. I could say that. So, look at Bristol Myers Squibb, ticker symbol BMY, right? Trading near 52-week highs, a 2.7% dividend yield. Look at AMZN. Now, AMZN is in the Dow. I think it's maybe number 5, the number 5 stock in the Dow, maybe number 6. Trading near 52-week highs, 2.7% dividend yield. Johnson & Johnson, another Dow stock, 2.5% dividend yield, and Merck & Co., 2.65% dividend yield, right? So when you look at a lot of the stocks that were performing well in 2020 and 2021, these were the ultra high beta growth, right? We weren't talking about any of those names we weren't talking about any of these names back then. Right, you were talking about your Atlassians, ticker symbol TEAM. This is Trump Tower, by the way. 721 Fifth Avenue. This doubles as an office building and apartments. It's a multi-use building. We were talking about the CrowdStrikes, the Cloudflares, ticker symbol NET. Shopify, your Pelotons, right? These very, very high beta growth, and these have all been slammed. These are down quite literally 80%, right? Now, we sort of talked about why. Again, completely different monetary environment. Interest rates are going up, liquidity is being sucked out of the market, and the cost of money is going up. So the present value of these companies' future cash flows are worth significantly less, and Wall Street is willing to pay significantly less for these stocks than what they were 24 months ago, so they're being repriced. And boy, are they being repriced. And Wall Street is having a flight to safety. They want to buy companies that are producing and generating free cash now. They want to buy companies with earnings right now. Look at Coca-Cola. I think Coca-Cola may have hit an all-time record high today, if not very, very close, I think. Anybody know where Coca-Cola is trading at, actually? I'm trying to make sure I'm not thinking of another company. I think it may be near a 52-week high. Anyway, let's cross the street. I want to show you guys all these cool looking and different holiday decorations, if you will. Sparks Carnival says Coca-Cola is definitely recession proof. Yeah, I would agree. Oh, look at the horse coming by. Hey, William is here. It says hello from New Zealand. Good to see everybody in New Zealand. Hey, Gary Carpenter is here. Good to see you, Gary. This is Tom. We missed you last night. I missed you guys too. TC says it's at a high, but it sure moves slow regarding Coca-Cola. Yeah, so TC, that is a fantastic comment. Right, so notice what TC said, right? It's trading near all-time highs, but boy, does it move slow. Because Coca-Cola is a mature company. Coca-Cola is not like a super high innovative growth stock, right? So in environments such as the one we are going through right now, where recession fears are plaguing everybody, preservation of capital, people just want to buy stocks where they're not going to lose money, right? It's a blessing in this market if you just don't lose money, right? So you have this flight to quality, boring stocks that pay dividends, that have very, very strong balance sheets. People are not in the mood to take risk right now, right? People are not in the mood to take risk. And one of the things we talked about earlier in the live stream, as we looked at leading economic indicators, right? We talked about the Institute for Supply Management Services PMI. But another thing that we could use as a leading indicator is the yield curve, right? Now, the yield curve, as it relates to the government or sovereign bond market in the United States, essentially plots the yields across the curve of maturities. Really quick, this is a dreidel here for all of our Jewish listeners who celebrate Hanukkah. And this is on the corner of East 56th Street. Now, I will say this. If we think about how we could use the yield curve as a leading indicator, this is how I use it. And this is appropriate because you'll sort of see how it ties into the conversation in a minute. Now, think about the yield curve as if you're an institutional investor or an institutional trader, right? So you have your 1 month treasury bills all the way to the 30-year, right? So in normal environments, you should have what's called a steep yield curve, right? That's a normal yield curve. So bonds on the long end of the curve are yielding higher yield than bonds in the short end, right? And in a normal economic environment, ooh, really quick, this is the Peninsula Hotel, beautiful 5-star hotel. And this is the St. Regis. another really, really nice 5-star hotel here on 5th Avenue in New York. Now, in normal economic environments, right, which is most of the time when we have GDP growth and investors are expecting corporate earnings to go up, they're expecting GDP to go up. The reason why the yield curve is steep is because investors tend, right, on a relative basis, they tend to sell the long end of the curve and buy the short end of the curve, right? Because if GDP is growing and corporate earnings are growing, I'm not going to lock my money up for 30 years, right? I want to buy risk assets. I want to buy equities. I want to buy stocks. So investors and traders will buy the short end of the curve to manage liquidity, and they'll sell the long end of the curve. And if we think about the correlation in the bond market, as bonds are getting sold off, yields are spiking. So if you're selling the long end of the curve, yields will go up. And if you're buying the short end of the curve, yields will go down, right? So naturally, you have a normal yield curve where the spreads are higher on the long end and lower on the short end. But think about if you're an institutional investor and you're forecasting very, very bad economic times. Well, now you want to load or buy the long end of the curve because you're totally fine with locking your money up at higher rates for a longer duration of time if you're forecasting that GDP growth is going to go down and corporate earnings are going to go down. So you're selling the short end of the curve. So you have now a flattening yield curve all the way into an inversion, right? And that's why when you hear this talk about inverting of the yield curve, that's sort of how investors and traders think about it, because you have a narrowing yield go up and they're buying long end of the curve, which makes rates go down, flattening the yield curve, and then unfortunately, if it gets bad enough, inverting it. And that is where we are at now, an inversion of the yield curve. Hey, Joan K is here. What's up? Ryan Iglesias is Tom. I missed you yesterday. I thought my YouTube was malfunctioning. A Sunday without Tom is not the same. Wow, thank you so much, Ryan. You know, we were on last night, but we were only on for like 10 seconds. I don't know what was going on with my phone. I couldn't see anybody's comments. I don't know if it was my phone. I don't know if it was Prism. I don't know. I couldn't see anybody's comments, so I kind of felt awkward just not talking to you guys, I guess. So I just shut the stream down. Yeah, so Michael Joseph is correct. An inverted yield curve has predicted recession 95% of the time. You are correct. Now look at how beautiful it looks in here. I've showed you guys this once before. Now we're technically not allowed to film here, so maybe I shouldn't, but it's the University Club. It's an amazing, amazing place in the city. Hey, Karen Oakley is here. Good to see you, Karen. Thank you so much for joining once again. Joan K says, Tom, what's up? Not too much. Marcelo Gil says, Tom, Brazil, the next soccer champions for sure. I mean, man, they are a good team. They really, really slaughtered Korea today. But I think the Koreans and the Japanese were by far the two most entertaining teams to watch. I mean, those guys never quit. If you want a good lesson in perseverance, I would rewatch every single Japanese game and every single Korean game. I mean, they did not quit ever. Even if they were down 4-0, I mean, they never quit, and I respect that. And they were really fun to watch. So Marcelo Gil, hopefully Brazil pulls it off. We'll see. Who knows? All right, so now we are making our way down 5th. This is the Microsoft store. Speaking of Microsoft, still trading below its 200-day. Back above the 50. Top G, this is off topic, Tom. Hope you're great. JP is the next meeting, gonna drop a full 1.5% increase. Crash this baby. Hopefully not. I don't think so. I think if Fed Chair Jerome Powell raised 150 basis points, I think you would be correct. I think we would have a major flash crash. Wouldn't that be hilarious if now Jerome Powell raises 150 basis points? I'm gonna be like, I feel like I've heard that from somewhere. I feel like I heard Top G talking about that. Lemonade, what's up? The LT prods is a lot of streamers had issues yesterday. Maybe it was something wrong with the network. Usually I have issues with Verizon when you have a lot of people slammed into one area. That's actually the downside of having a very popular carrier, for those of you who don't know. Because you have network congestion when everybody's on Verizon in one specific area. This is actually why I used to have Sprint back in the day, because I would always have lightning fast. I had Sprint, so the network would never get congested. It was fantastic. So this is St. Thomas Church. This is one of my favorite areas in the city, as you guys know. Always love looking at St. Thomas Church here. Editorial informal says, Tom, too early to tell. The real cup is just starting among France, Brazil, Argentina, and Spain. All right, let's quickly do that survey. So based upon the teams that are in it now, who do we want to win the World Cup? Now, I'm going to go Argentina, mainly because I really, really want to see Messi win a World Cup. I was going to say Portugal, but at the end of the day, I don't know. Cristiano Ronaldo has just he's been rubbing me the wrong way this tournament. He hasn't really been hustling. Now, I know he's been battling injuries. I know he's getting older, but he's still one of the best players in the world. But the past 2 games, he's been off sides like 16 times. You know, I don't know. I think Messi is having a better World Cup than Ronaldo. Now, maybe that'd be controversial, but who knows? Dusty Cole says, I want Messi, but love the way Brazil plays. Yeah, I think Brazil has the goal of the tournament this year so far. I know. Carson says, Tom, did you see the new contract he just signed? What was it? Was it $200 million, right? Or $100 million? So I think he's going to a club in Saudi Arabia, right? Now, he's obviously just doing that for the money, and God bless him. I mean, if somebody offered me $200 million, I don't know. I think I'd probably go play wherever they wanted me to play. Dusty Cole says, yeah, it's $200 million bucks. Whew. That's insane. And I think it's only a 2-year contract too. It's probably a guarantee. So even if he rolls his ankle, he's probably going to walk away with 200 mil. Wow. Oh, Natalie says Croatia. Nice. Yeah, who is the top player for Croatia? Is it I'm blanking on his name. Luka Modric? Modric, I think. All right, team, check this out. This is West 52nd Street, overlooking the beautiful Cartier building. Modric, you're correct. Bill Rowland's like 200 million. Wowza. You know, knowing Ronaldo, I think he probably could have negotiated more if he really wanted to. Yeah, somebody says the Saudi money is, yeah. You know, I'll tell you, so this is what I heard, right? So since in Saudi Arabia, and if you look all the way down here, you could see the Saks Fifth Avenue Christmas light display, as well as St. Patrick's Cathedral. Oh, Isaac Siegel says, Tom, I just saw a show at Lincoln Center. What did you see? Did you see the, what show did you see? Did you see the Nutcracker? Which one? You know what I really want to see this year? I want to go to Radio City and see the Rockettes. I haven't seen them in probably about 4 years now. I was going to go in 2020, but obviously we all know what happened there. But Lincoln Center is beautiful. Lincoln Center is awesome. So here's what I heard about Saudi Arabia. Now, since they have, you know, the royal family there, legally, or they're not legally obliged to disclose their wealth. So it's very possible that they're worth trillions. It's very possible that they're trillionaires. So I think they could definitely afford to give Cristiano Ronaldo $200 million. Again, allegedly, I don't know for sure. Adriana's seeing the Rockettes perform is my dream, yeah. They're good. I think you got to do it at least once. And it's not too expensive either. It's not bad. Now, this past weekend, they actually closed down the entire 5th Avenue to cars. It was only for pedestrians. It was actually pretty cool. Mike NY says Germany will win. I think they didn't even make it out of the group stage. But Germany has won World Cups in the past. Editorial Informal says, how do you see the interest of the American audience in football? Next cup will there. I mean, I guess we call it soccer, right? But look, I like soccer. I've played it throughout my entire life. I played it in college. But it's not as big in America as it is obviously overseas, right? I'm not going to say that we're a leader in the world. We're not. We're obviously not. So I think that's why I was pretty pleased and excited that we tied England, right? I think tying England 0-0 is like a win. Especially watching how England beat up on Senegal. All right, so I'm not sure if we're going to be able to walk down 5th just because there's so many people, and I think we're going to start buffering. We'll see. Jonathan Francis, how often does the World Cup take place? Every 4 years. So I think the exciting thing about this World Cup is that we didn't qualify in 2018, so it was cool to see the United States national team play. Andre Brown, what's up? Says hello, everybody. Good to see you, Andre. Thank you for joining. Appreciate it. I think we're going to have to go around the block because it's going to buffer over there. There's too many people, so we'll try to go around the block. We'll see if that'll work. But this is the Olympic Tower. I was telling you guys about this. If you go to my Twitter feed, if you follow @WalksWallStreet, I posted a video of a really, really nice view in an apartment there. Check it out. It's an amazing, amazing building. I think just because where it's located, right? You could see St. Patrick's Cathedral. You could see the Chrysler Building, Empire State Building, Salesforce Tower, One World Trade Center. All from that building. It's fantastic. And I think the reason why is because obviously they're not going to redevelop St. Patrick's Cathedral. This place is going to stay like that forever. So you sort of, if you live anywhere here in a high-rise behind or in front of St. Patrick's, you're really going to have an unobstructed view of Midtown just because there's really nothing taller in front of you. So it's pretty nice. It's a nice building. Dan says, what is your thoughts on the semiconductor business? Well, I think long term I'm a bull, but look at the SOX right now, ticker symbol SOX. We're still in a screaming downtrend for semiconductors. But if you think about all of the new innovative technologies that are going to power the 21st century, we talked about robotics, AI, EVs, right? There's about 2 times as many chips or chipsets in an electric vehicle than there is a traditional vehicle. So semiconductors is going to play a big part. This is the New York Palace here. They have a really nice Christmas display. Now, I wrote down 2 specific, I should say, responses from the services PMI report. Now, obviously, I would really encourage all of you to go to the Institute for Supply Management's website, download for free the PMI report, the services PMI, and take a minute, 15-20 minutes to read through what the respondents are saying. I'll cross over here to show you guys the art gallery. But here was one of the responses from the report. It says, local, regional, and national supply constraints continue to create supply chain complexities and challenges. That is coming from a purchasing manager in the utilities sector. The other sector says, business volumes appear to be leveling out based on month-over-month comparisons, although we are up significantly compared to the same level last year. And that is coming out of wholesale trade. Now, as we look at the PMI report as a leading indicator, we could also look at it to generate trade ideas. So those are just 2 that stood out to me. But again, I would really highly advise you go through that report and read it for yourself. This is the Eden Fine Art Gallery. We always pass this here in New York and in Miami as well. They have a lot of nice pieces here. I think that is Scrooge McDuck. Let's see what else they have. Oh, here's the other entrance to the New York Palace. Wow, that's horrible. Now I'm seeing a lot of comments in the chat. Christy Alley passed away. Now, in full disclosure, I do not know who that is, but that is horrible. That is horrible. And condolences, my sincere condolences to her family or anybody who was a fan. I'm sure she was a celebrity or something, but I just am not too sure who she was. Hey, Sean, thank you so much for your $10 donation. Says, you're a really nice guy. I live in Texas, but I was born in Long Island. Lived in Shirley, Long Island. I really enjoy listening to your channel. Hey, that's awesome. Shirley is Suffolk County. I sometimes head out there often. I am Massapequa in Nassau. But Sean, thank you so much for your donation. I appreciate it very much. And hopefully you had a very happy holiday, Thanksgiving, and Merry Christmas. Oh, it's an iconic actress. Julia M says, holy crap. And Tom, as an American, you should know who she is. I honestly don't know. I swear to God. So for some context for those of you watching, now again, I don't know if it's an age thing. I don't know who it is. I don't know what time she was around. But I was born in 1995. And I never really watched much TV. But it's horrible. And anytime you hear somebody passes away from cancer, it's disgusting. It's really, really heartbreaking just to see it. I've experienced it firsthand with my grandfather. He had leukemia, and it's sort of strange to say maybe what I'm about to say, but it's true, at least in my experience. It's almost more sad. Well, it was more sad for me watching the suffering during the period of actually living with cancer. It's almost like you find peace once they pass away. And I know that sounds really, really crazy to say, but if you've known anybody with leukemia, the suffering is just like unreal. And it's almost like physically depressing to watch somebody literally wither away like that. So, I don't know. That's sort of how I think about it. It's sort of like a sigh of relief, like, my God, this person doesn't have to suffer anymore, because it's unreal. It's just unbelievable between just having the cancer and then the chemotherapy. It's just disgusting to watch it. Young Nation 92. This is Tom. I thought you were a little bit older. I was born in 1992. Nice, 90s. Love that. The LT prods is 100%. I recently went through with my grandmother. Yeah, it's so crazy what cancer does to the body. It's unreal. But this is going to be Jamie Dimon's new office tower. It is going to be JP Morgan Chase, 270 Park Avenue, the brand new building here. Zozo Bob, so sorry to hear that. Wow, Kim Grant, I'm sorry for your loss. It's horrible. Let me see. I missed something. Let me see. Hold on. All right, let's cross here. And I think we're just going to be out of the zone where we start to buffer. So maybe we'll make a right here. But really quick, this is going to be the brand new JP Morgan Chase office tower. They're making some pretty good progress on it too. It is kind of a strange foundation of the building, isn't it? It's almost the opposite of the Jeffries building. All right, and here we are coming up on BlackRock, or at least the back of it. Oh, we'll briefly retouch on the XLE, okay? So I think this is important to get down, because what we've been seeing over the course of the last month is a very, very obvious divergence between crude oil as well as the XLE and many of the pure play energy and oil stocks, okay? So take a look at the price action of the XLE today. Came down in a big way. I think it was down about 3% on the day. Divergence, and we're like, look, something has to give, because usually right? And again, markets are very dynamic. So we're saying generally speaking. We had crude oil. If you want to look at the light crude futures, you can type in ticker symbol CL. That is the futures contract of light crude. If you think all the way back to March, we topped it around 130, and now we're trading at $77 a barrel. Now, we've also seen in that same time, the XLE, which is the energy ETF, that is very heavily weighted towards oil and gas. Now, one of the things I like to do, which is a very, very good exercise, go to the Spiders website, right? So the XLE is the Spiders ETF that tracks the energy sector. The two biggest stocks that make up most of the weighting in that indice is ExxonMobil, okay? Ticker symbol XOM, a 23% weighting in the XLE. Number two, Chevron, ticker symbol CVX, 19% weighting. So almost two stocks make up almost 50% of the indice, right? And I'm not sure, is crude futures down after hours? I don't know, maybe one of you guys could tell me, but it's either one of two things happen. It's either the stocks catch up with the underlying commodity, or the commodity catches up with the stocks. And it's usually the stocks catching up with the commodity. So look, could oil have put in a cyclical top here? It is very possible. And if you look at the 50-day moving average, wow, look at this. This is an amazing view of the Rockefeller Center Christmas tree. My God. It's really nice. Not better than the Wall Street tree, though, but it's nice. If you look at the 50-day moving average on the XLE, price seems to be correcting there, but if we break that 50-day on high volume, and we also have ExxonMobil, Chevron, Devon Energy really cracking their 50 days as well and have a lot of volume pouring out, I would say this is probably the cyclical top in energy. But I think we need to watch that, because the divergence, at least it seems to be cracking, but we'll keep an eye on it. All right, let's see if we can cross here. I'm just nervous if the stream is probably going to go out or start to buffer. So if we start to buffer, let us know in the chat, please. All right, here we have the Christmas tree at Rockefeller Center, 30 Rock. Hey, Faith is here, good to see you. So if we think back to our live stream on Saturday night, what do you guys think? What do you think is the better tree? Do you think it is the one down on Wall Street, or do you think it's right here, 30 Rockefeller Center? I don't know. Actually, as I get a view from this side, I think it's close. Hey, Jonathan Francis. Hey, Tom. We should do a mock stock pick to follow it for the next few months, is Jonathan France. So I would do that, and I thought about doing it, but I think there's a lot of opportunists, unfortunately, and they would probably say, hey, Walks on Wall Street told me to buy this and that, and then they're going to try to sue me. So, unfortunately, I don't think I could do that. Yeah, Natalie says Wall Street is better. I think it's more full, the tree down there, but it definitely does look nice. I wonder if they still have people ice skating here. Wow, we just got cold quick. I think we hit a little bit of like a cold spot. Yeah, Karen's like the Wall Street tree has a little bit more color. I think I agree. Okay, we'll see if anybody's ice skating, and then we got to boogie on to the Moynihan train station. Oh, I think they closed it off. Yeah, I don't think we can get down. I think they closed it off, unfortunately. Hey, Love is Kind is here. Good to see you, Love is Kind. Thank you for joining us. Appreciate it.
Yes, pussy.
NMB 045 says Wall Street tree is nicer, but Rockefeller has more lively atmosphere. I agree, NMB 045, but I also think that's what makes it a little bit better. I'm not a huge fan of crowds. Oh, before I forget, everybody, if you have a TradingView account, right, which is just a free charting software, really whatever you use, in your favorites tab, I would very, very strongly recommend, especially right now, you add ticker symbol JNK, okay? And this is going to allow you to track the junk bond market. Okay, so over the course of the coming weeks, we are going to be doing some rather deep dives into analysis of the corporate bond market. Obviously, we've been really putting a lot of heavy weight on the sovereign debt market, right? Or the government bond market, looking at treasuries, doing yield curve analysis. But we are really going to start to double down here, specifically on the corporate debt market. Now, the junk bond market is what you call the high yield debt market. And if you think about how the government bond market works, oh, look at this dog. I think that's actually maybe a working dog, like a bomb sniffing dog. Love that. I think that one is too, the other one. If you think about the government bond market, the United States Treasury will issue bonds in order to raise money to finance government spending, right? The corporate bond market works very, very similar. Corporations could tap into the debt market to raise money to finance their operations. Now, you may be asking yourself, well, why would corporations want to do that instead of, give out equity or list new shares? Well, it's cheaper most of the time and it's more advantageous, right? Why would I want to give up equity? So if you tap the corporate bond market, all you have to do is pay the coupon on the bond, and the rating agencies will assign you a score based upon creditworthiness, right? So in this case, you could tap the bond market to raise money and you don't have to give any equity away, right? You don't have to give up any ownership of the company. And most importantly, in my opinion, you don't have to dilute existing shareholders, which we'll talk about. So keep your eye on the junk bond market, because the junk bond market tends to, and as we talk about on order to do two things: growth and forecast corporate earnings. right? Are corporate earnings going to go into recession? Are corporate earnings going to contract? Are they going to expand? And there's a lot we could tell from the corporate bond market, both investment. I think as we get out of the touristy areas, I think we should be a little bit better as it relates to buffering. All right, I think we should be good as we get out of the touristy areas. I think we'll be good. Now, maybe for the next couple of nights, we'll probably stay out of Midtown. This is the Diamond District, by the way. Let me also plug in my external battery as we get up here. Yeah, but essentially what I was saying is there's multiple reasons why corporations want to tap the bond market, right? And again, markets are very dynamic, and sometimes, right, not all the time, we can use corporate debt as a leading indicator. So one of the main reasons why a company would more so want to tap the bond market is because they don't have to give any equity away, right? And more importantly, in my opinion, they will not have to dilute existing shareholders, right? So if you could just tap the bond market, let me cross. If corporations can tap the bond market, and again, this is very dynamic, so it's not an exact science, but again, they won't have to give any equity away and dilute shareholders. So the reason why we look at investment grade bonds, corporate debt, high yield investment grade, which is like BB, and junk bonds, which is the junkiest of the junk all the way down to CCC, is because based upon how these yields move, we could take some very significant clues from that. So for example, if investors and traders are buying corporate bonds, generally speaking, that means they have a positive outlook on the health of those companies. But if they're dumping and selling very aggressively, that does not signal investor confidence in the market, and that also spills over into the equity market, right? So if you notice, if you look at a lot of these indices, right, these corporate bond indices, the benchmarks, like the junk bonds, usually the junk bond market moves first. When the spreads are blowing out, that usually coincides with the time of economic stress. But I'm gonna put you guys down for a moment because I have to plug in my battery pack.
And I'm overheating.
right, we are good to go. We are passing the Steinway pianos. Very expensive pianos here. Hey, Dr. Murray Hill, MD, says, hey, Tom, just watched Margin Call Saturday night based on your recommendation. Great movie. Talked about dumping things you've lost confidence in. Yeah. Glad you enjoyed the movie. Great movie. Fantastic movie. Now, today on the live stream, for those of you who are just joining, we talked about the services PMI, right? Obviously, the first business day of the month, we get the manufacturing PMI, which are great leading indicators. We also talked about the Chinese market, right? HSI, Hang Seng Index, is performing very well, up about 34% from the lows. I think only 300 points away from its 200-day moving average. And then we talked about true market leaders. So true market leaders that are putting in major cyclical end of business cycle tops, such as Tesla, Amazon, and the like. Hey, Teresa Diaz, thank you, new subscribers. 25,600 people. Oh my God. That's insane. Well, I really appreciate everybody who's been subscribing, joining in on the action here, and also giving their opinions on the market. I appreciate it. And Teresa Diaz, thank you so much. Ooh, I'm tempted to pick up that bike, but I don't think I should. But I don't think it's good that the bike is dumped. Can it flood the engine? I heard that before. All right, quick rating on the Empire State Building here from Bryant Park. I'm gonna go, I'm gonna go 9-1. I'm gonna go 9-1. Not my favorite color scheme, but it looks good. Will M says you should, that is said. Yeah, but then the city's getting crazy nowadays, so I don't want anybody. Days Works, Tom, have you ever had the chance to watch the movie Trading Places? I have not. What is Trading Places about? The only reason why I'm not going to pick it up is because I've been in a scenario very similar to this, but it didn't involve a motorcycle. It involved a regular bike, and it was dumped on the ground. I go to pick it up, and the guy thought I was stealing it. He chased me halfway down the block. And I was like, no, I was just trying to pick it up. So, yeah, from that point, I just, look, it is what it is. New York is a crazy place. And I don't want him to turn the corner at the wrong second and be like, look at this punk trying to steal my bike. And then the next thing, I get curb stomped right here outside Salesforce Tower. Brad's Brains says, watch Trading Places. What is it about? Anybody could provide a little bit of context on what Trading Places is about? Hey, Josie is here. What's up? Beth Collier says, Tom, Trading Places is a must watch. It has Eddie Murphy in it. I'm a big fan of Eddie Murphy, so I'll probably watch that. I think he's one of the greatest comedians of all time. Yeah, Dr. Murray, MD, says, yeah, or he'll think you're the person who knocked it down and sue me. It's crazy that the world is like that, but look, I get it. I get it. Now, you know what's wild? Now that we are walking past the Salesforce Tower, Salesforce was very newly added to the Dow Jones Industrial Average. And correct me if I'm wrong, everybody, I think Salesforce, ticker symbol CRM, is the worst performing stock in the Dow. Is that correct? I think Salesforce is the worst performing stock in the Dow, which is very believable, being that the stock market doesn't favor tech anymore. It favors more value, mature companies that are generating ample free cash and paying dividends, all which Salesforce is not. Now, it is a more mature software company, but it's not paying all those big dividend yields like a lot of the pure play oil and gas stocks are, or many of the stocks we talked about today. All right, West 41st Street. Donna says, I sold Enphase at $9. Now it's trading at $335. You know what? Yeah, so Donna, that's another thing that we were talking about tonight, is usually once these major true market leaders have topped, right? Like your Teslas, your Alphabets, all of the ones that were leading the market, like Shopify, very seldom do those stocks then go on to lead the market in the next bull cycle. It's usually completely new leadership. So one of the things we were talking about today is if you had to pick a sector that is outperforming, right now for me, that is big pharma. And we talked about, hold on, let me just cross here. Give me a moment. This is Bank of China, by the way, very unique building. Now, I would say undisputably, if that's a word. Is that a word? Undisputedly? Well, we're going to go with it anyway. The sector that's leading this market is biotechnology and big pharmaceuticals. So take a look at Amgen, right? Ticker symbol AMZN, trading near 52-week highs. Very healthy dividend yield of 2.7%. Bristol Myers Squibb, ticker symbol BMY, 52-week highs, 2.7% dividend yield. Johnson & Johnson, 52-week highs, 2.5% dividend yield. Merck & Co., ticker symbol MRK, 2.65% dividend yield. So again, it seems like this market, now that we are in a completely new monetary environment, right? Interest rates are going up. Investors are dumping growth and buying very well-established, high-quality companies that are generating free cash and paying dividends. And it seems right now, biotech, healthcare stocks, and big pharmaceuticals specifically are performing well, but also a lot of the solar stocks too, like Enphase, I think is near a 52-week high. And I think one of the catalysts there could probably be a lot of the government subsidies that are going to be coming down the pike here for solar and renewables. So all the stocks that I'm worst at trading are leading the market. It's probably going to be a horrible next couple of years for me, but what can we do? I'm horrible at trading oil stocks. I'm horrible at trading biotech, and mainly like small biotech, because in my opinion, if you're good, well, here's the problem, and this is why I generally am not good at biotech investing, because I don't have an edge. I think you need to really know what's going on. Because a lot of these smaller biotech stocks, they can be very revenue dependent on one product. And depending on if that product goes through different stages of clinical trials and hopefully gets granted FDA approval, that will probably do good and generate a lot of money. But you could wake up one day and the FDA declines to approve the drug, and that is the only sort of revenue generator, the only product that company has, and the stock gets creamed 50% overnight. I've seen it happen multiple times, and I'm not a biomedical engineer. I'm not an engineer, right? I don't know about that stuff. Now, someone like my brother, right, who worked in big pharma, right, he is a biomedical engineer. He got his biomedical engineering degree from Cornell. He went on to work at all the major big pharmaceutical companies. That's his wheelhouse. I don't know anything about that stuff. So I try to stay in the sectors of the market where I have an edge. And it just so happens the two sectors that are leading the market, I have zero edge. So there you go. Hey, Brad's Brand, what's up? This is how you're trading frozen orange juice concentrate contracts. Yeah, maybe we'll get into orange juice futures and ride that out. Yeah, so that's true too. Sparks Carnival is a small biotech, often ends with acquisitions. That is very true. Michael Joseph says, Tom, you need trade tech. Since you were in sales, you probably have an edge. Yeah, and I think that's why over the past, I would say since 2015, I did really well. Oh, I thought that was a red light for them. I did really well. But look, my type of stocks are out of favor, right? Extremely out of favor. The very high growth, high revenue growers that have earnings priced in the future or have future earnings and very little earnings now, that's all out of favor, right? Because those companies, what was that? Because those companies could get away with it. Anybody see that? We had a little rat go right through there. Anyway, those companies could get away with using all the cash they generated to plow back into research and development to grow the business when money was cheap. But money is not cheap anymore. Money is relative, again, on a relative basis, is getting more expensive. So investors are dumping those stocks and buying stocks that are generating cash now, that are paying dividends now. So there you go. Yo, Manny Explorers, what's up? Manny Explorers, welcome. Hope you had a good Thanksgiving. And Merry Christmas to you. Happy holidays. Thanks for being here. Yeah, Robert says, I heard they are going to tackle the rat problem in New York. Yes, well, supposedly they're looking to hire an expert exterminator for around $165,000 a year. And I was reading the New York Post article about it. I'm not sure if you guys saw it. I think you did. But a lot of the comments on the article was, oh, that's overpaid. You know, $165,000 to deal with that. City's wasted money. I would actually argue the reverse. I mean, am I wrong about that? I mean, it's definitely not my line of work. But could you imagine the nasty, disgusting stuff you have to deal with? Now, we see rats here above ground, but if you're going to deal and treat the rats and try to kill them, that means you have to go into the most disgusting places in New York, the sewer systems. I don't think I would take that job for $170,000. I think that's actually underpaid. So God bless whoever takes that job. Sergio, what's up? Sergio, this is Tom. Now go watch Trading Places. It's a comedy and related to the stock exchange. I'm going to probably have to watch that tomorrow because so many people have been recommending it to me. Yes, Stephanie Stanley says it's definitely not overpaid. Dr. Murray MD with the comment of the night says the amount of science knowledge you need to cure a rat problem in a major city is worth the salary alone, never mind the responsibility, liability, stress, and grossness of the day job. 100%. I agree 100%. Now, also, again, I want to preface this by saying I'm not a chemist, I'm not an engineer, I don't know, I'm just assuming, but my grandparents used to clean buildings in the city, right? They used to go to all the major office buildings and the banks and clean them. They were janitors. And the toxic chemicals back then and the harsh chemicals that they used to clean the buildings, I mean, that has serious health implications there. So could you imagine dealing with all the rat poisons and breathing in the disgusting stuff in the New York City sewers? I mean, just the health risk alone. So I think $170,000 salary is, that's not as much as you would think, and I think they deserve every penny, in my view. Again, my opinion. Now, obviously, due to OSHA standards, things are probably a lot more cleaner now, but it's probably not healthy to breathe in all of that toxic, rat poison and pesticides, whatever they use. So I think they deserve every dime they get. But anyway, that's my 2 cents. All right, team, check this out. Macy's Herald Square. Fantastic here. Dan Zhang says, Tom, do you think the way to fix it is by flood the city with wild cat population? Just a curious thought. I'm not sure. I really don't know. I could tell you this. In southern Florida, there are so many stray cats, it's ridiculous. And I think that's why there's not a lot of rats. I think it mainly has to do with the garbage and the trash being left out. And mainly because there's so many people in the city. Hey, Jacob O'Brien says, Tom, I've been thinking about a Fed pivot phase 1, possibly a huge drop again in 2023, more job loss. When can one say the economy has recovered? As always, thank you. Yeah, well, I think here's what I'm basing it upon. And it's not just Fed Chair Jerome Powell, right? This has been many, many Fed presidents at different branches of the Federal Reserve, most notably John Williams, which is the New York Fed president. And he said, look, consensus, whoa, geez, you guys see that? That guy almost got knocked off by that bus. Jeez. Anyway, I don't know what I was saying. Oh yeah, so Fed President John Williams of the New York Federal Reserve, he said, we are looking at a 5% unemployment rate. That's what we want. And we just got the non-farm payroll numbers out, and the unemployment rate came in unchanged at 3.7%. So I think you're going to have the Federal Reserve stay very consistent with raising interest rates and contracting the money supply, essentially quantitative tightening, until we see about a 5% unemployment rate, and the unemployment rate was unchanged. Also, I think it's on Friday. Is that correct, everybody? No, Friday is the University of Michigan Consumer Sentiment Report comes out. But when is the PPI coming out? I think that is Thursday. It's someday this week, I forget. We need to solve for the problem of wage inflation, because wage inflation is becoming very, very sticky within the economy. Also, labor costs are really, really being a major problem. So if you think about the 3 components that a lot of the Federal Reserve presidents have been talking about, number 1, it is shelter costs, which makes up about 33% of the consumer price index. Number 2, they want to see wage pressures coming down. And number 3, I would say above all, they want to see labor costs coming down. And I don't think you're going to see that until we have the unemployment rate materially tick up here. Now, this is also why I put a lot of heavy weighting on the Institute for Supply Management, both PMI in the manufacturing sector and the service sector. Because take a look at the service sector PMI today. There was a ton of comments about how tight the labor market is still. They're having a very, very hard time hiring skilled labor already. Still this far into the recovery. So I think those 3 things need to be solved before we could even think about a pivot. But again, that's my opinion. Doesn't mean I'm right. What are your thoughts there? Jay Butcher is here. What's up, Jay? Good to see you. Outer Haven says, I think they changed the unemployment definition like they did with recession. Yeah. Lexus, I think 2023 is looking brighter than it did a few months ago. I would agree. Now again, I will say the famous saying, the stock market is not the economy. So just because the stock market goes down, right? Let's assume it goes down next year. But I'm not saying it will, I'm not saying it won't. But the stock market isn't the economy, okay? If the stock market is down, it doesn't mean you can't succeed. It doesn't mean you can't get that high-paying job. It doesn't mean you can't start the business you always wanted to, right? So focus on building fundamental skills for yourself, regardless of if the stock market is up, down, sideways. It's not the end of the world, right? The United States has been through multiple bear cycles, multiple bull cycles, and we've always come out on the other end in a better spot, 10 times out of 10, right? We've been through world wars, we've been through 9/11 terrorist attacks, we've been through Great Depressions, we've been through a 2008 financial crisis, and we've been through COVID-19, right? There's going to be bull markets, bear markets, recessions. And I think over the past 14 years, the reason why it feels a little bit weird this time is because every time we have started to go into an economic downturn, we start to cry for the Federal Reserve to bail us out, right? So the Fed's number one job, even though it's not supposed to be this, but it seems as if their job is to get in here, to manipulate the price of money, to prolong an economic expansion cycle. So I think we need to shake off about 14 years of economic excess that has been driven primarily by liquidity, ample amounts of liquidity being pumped into the market. So look, it's not all bad things, right? Bear markets aren't the boogeyman. They happen, they're normal. But if you guys have enjoyed the live stream so far tonight, feel free to leave a like on the video, hit the subscribe button if you're new, and if you like the sort of conversations we talk about here on Walks in Wall Street each night, please feel free to scan the QR code on your screen, okay? And join us. We write a free investing newsletter for the group where we talk about the U.S. equity markets, emerging markets, fixed income, real estate. So please scan the QR code, punch in your email. It is a completely free way to stay connected with the group here. And I think we are over our 2-hour mark. We are now well into Walks in Wall Street after hours. So we will conclude the stream at the corner here of 34th Street and 8th Avenue. And I will see you all tomorrow at 8:30. We do these live streams at 8:30 p.m. Eastern. I'm looking forward to seeing you guys there. Once again, hopefully you had a great start to the week. Make it an even better Tuesday. And I'll see you guys here tomorrow. So Dusty Cole, thank you so much. Charlie Richardson, Will M. Vivian, as always, thank you so much. Odina, John Roberts, Will M. Sergio, thank you. Sunshine After Rain, Sparks Carnival, Dr. Longas, Abdullah, The Dark Horse, I appreciate it. Mike C, Joseph Hardaway, Austin City Limits, Jay, Karen, Joan, Sergio, Brenton Long, thank you so much. Abdullah, Mohammed, Harry, Connor, Andrea. And to the Mighty Bull, have a good night, because there is always a bull market somewhere. You just need to know where to look. I'll see you guys back here tomorrow, 8:30, live from New York. Bye for now.